back to Fast Money. Continued threats of government regulation crippling the crypto market today. Cryptocurrency prices tanked after South Korean officials reiterated that a crackdown on trading was still possible. And this as China is also reportedly stepping up its own efforts to regulate the market. Bitcoin losing almost 20% since the debut of Bitcoin futures. We should know Bitcoin itself has been cut nearly in half. Cue the Bitcoin bug. Our next guest says beware. The crypto carnage could spill into U.S. markets. Chris Harvey is the head of equity strategy at Wells Fargo Securities, and he joins us here on set. Chris, great to see you.
Great to see you, too. Thank you.
What is the mechanism of transmission if institutional investors are not really invested in Bitcoin and there's hardly any leverage in the Bitcoin market?
I think it just becomes finance 101. What you have is a risk-on situation, and today we had a risk-off situation. The risk-on situation is equities are higher, crypto was higher, high yield was tighter. Today, what do we have? We had crypto sell-off, we had the equity market reverse, and we had high yield widen out. To us, it's really that simple.
So do you think that the same the investor in the cryptocurrency market is actually feeling the same things as the equity markets or the high yield market?
It's everything is price relative. So if the crypto market or risk is not going to be well bid in the crypto market, it shouldn't be well bid in the equity market or in the credit markets as well. It should all be across. Now, we can argue about to what degree, what beta that is, and over what time period, but they should all be related. And that's what we're seeing today.
Couldn't they be different investor groups, though? I mean, isn't that the point? Melissa's point is institutions aren't really playing crypto. They can't really play crypto. Some of them are in. But retail frenzy in crypto, and in fact, crypto started selling off a week ago.
So if we talk, let's take another example. Let's look at the rates market. If rates go down, should dividend yield or bond proxies go higher? The answer is usually we see that. But the two don't usually invest together, and it's something similar. Again, everything is price relative. Everything's a beta on everything else. And so when we look at it, what we saw was just risk off. And again, it's risk off across the board. It just doesn't happen in one spot. It's not in a vacuum. And so this was a bit of a spillover. And it's something that we have to be worried about and something we have to look forward to.
It sounds sort of like a hunch on your part that this is happening. I mean, is there a real correlation between the two markets?
So what do we see on December 22nd? We saw cryptocurrency sell off. We saw the equity market get a little bit soft. We saw within that, we saw technology sell off. And within technology, we saw semi sell off. Today, again, what did we see? If you ask around, and maybe, Guy, you know, you ask around, you talk to people, what do they say? They didn't really point to any particular story. People say, well, it's technical. Well, it's this. It's the market's tired. But what we do know is crypto did sell off. We do know that equity market did reverse. And we do know high yield did widen. And so this is what you should expect.
So my question is, and we've talked about this, I don't know the answer, but is the euphoria of cryptocurrencies over the last month, is that somehow potentially emblematic of a equity market top or near-term top?
So people talk to us about euphoria and sentiment and so on and so forth. The biggest thing that we see is fear, and there's two types of fear. It's fear of missing out, and people don't have a fear of the downside. So when we talk to clients, they don't want to de-risk. They don't want to raise cash. They don't want to miss out. That FOMO, the fear of missing out, is very palatable. The second thing is we haven't seen the downside. So people forget that there actually is downside. What I think we're seeing is a repricing of risk, a healthy repricing of risk. What we've seen up until now, we've seen equity markets move higher, vol move higher. And we think that's healthy. What we're starting to see is central banks start to pull back. Now, what we're seeing is equity markets, fixed income markets have to stand on their own, and fundamentals are starting to take place. And to us, this is all part of the process, and this is a healthy process.
A crypto sell-off and a market softening, is that simply, though, I mean, couldn't it just simply be coincident as opposed to it being a correlation?
It can be. And
I mean,
so
do we have enough data points to actually say, hey, you know, I'm really worried about an implosion in cryptocurrency market affecting the equity markets, because I don't feel like the investors are the same, or they're driven by the same intentions.
They're not the same. But again, if you have risk priced in one part of the marketplace very aggressively, you should have risk priced very aggressively in other parts of the marketplace. What do we see year to date? Returns to risk factors very, very strong. So again, what we're going to do is we don't want to put our head in the sand and say we're going to avoid the whole situation. It's really nothing. What we want to do is we want to better understand what's going on, the size of the market, the liquidity of the market. And what we're seeing, as it grows, it becomes a bigger and bigger liability. We can debate. Again, we can debate about the beta. We can debate about the length. But really, there is an influence. Now the question is, we'll watch it going forward, and we'll see if it was just an accident or if there is a really big connection.
So you wake up in the morning, you're an equity strategist, and before you get on the phone with your clients on the horn, talking to them, what do you look at? I mean, are you looking at yields? Are you also looking at cryptocurrencies and what they're telling you?
We are looking at everything. We're looking at yields. We're looking at the shape of the yield curve. We're looking at the credit markets. We're looking at earnings. We're looking at commentary.
And you're looking at Ethereum.
We're looking at the cryptocurrency market and how it's trading. Okay. Is there a correlation? Is there a connection? Is it rolling over?
We don't know yet. Is what you're saying?
No, I can't. Can I guarantee it? No, I cannot guarantee.
But you're not saying that the market rally. I mean, if there's a Bitcoin or a crypto implosion, that the markets will then go down or feel the impact. Because we don't know.
No, we don't know, but we would expect that to occur.
Right.
And today that did occur. We'll watch it going forward. And so we don't think we think there's something to this. And so it's important for our clients to understand, and we don't want our clients to wake up one day and realize, hey, my portfolio is more correlated to the crypto markets than I thought. That's a very difficult conversation. That's a very difficult thing to occur. So it's a very fluid situation. We're watching it. We don't want to overstate it, but we don't want to put our head in the sand. And we think it's important to understand it more and more as we go forward because it is a fairly big liability.
Got it. Chris, thank you.
Thank you.
Chris Harvey, Wells Fargo. What do you think?
So I get what Chris is talking about as far as risk on and risk off, but you talked about correlation versus causation. I think you have to treat everything as it's an individual entity. I don't think that Bitcoin will take the overall market down, but I get the risk appetite element to it.
Tim?
I think there's total correlation to Bitcoin on the way up. I think on the way down, no. I don't think there has to be. In other words, I think you have a lot of weak hands in Bitcoin right now, and I think they're the guys that came in late in the game and the people that are stepping out. There are people that have been advocates and players the whole way, which I think will probably hold in here, but I think a lot of people had the FOMO, and those are the people that are selling on it.
Look at that bug.
What? Where?
Under 10,000 on the
sorry.
Bitcoin.
I thought you meant like a
No,
mosquito.
not like why.
Oh, sorry about that.
No, the Bitcoin bug. So Bitcoin itself broke 10,000. The futures contract also, as you would imagine, below 10,000. Should we be worried in tomorrow's session about this reversal taking new steam and
in terms of cryptocurrencies for the equities?
Yes.
Karen made that point on her call, and she might be spot on.
Here.
I would push back and say, I think Tim is saying this as well. I don't think crypto is big enough to be systemic for the equity market, in my opinion.
I mean, crypto, looking at just the top handful, top 5, lost $100 billion today-ish.
The top 5 currencies.
Top 5, right, out of, hundreds. I do think there's something to it. I mean, I think there are a few different holder bases of cryptocurrencies. I'm one of them. I have a lot of equity exposure, and I have a very small amount of crypto exposure.
Seeing this decline, does that make you want to pull in your horns, though, on the equity portfolio?
No, not for me, but I'm not I'm just looking to be there for the long term, but I think I may be unusual in that. And so I do think there's going to be a correlation here, and, that's okay. There's a lot of volatility in crypto, for sure.
Yeah.
And I think we'll see some. I think that was the main driver today, actually.
Interesting. We shall see. We shall see. Still ahead, as the Dow soars to new heights, its oldest component, General Electric, is tanking. Could be on the verge of a breakup. What will that mean for shareholders? We will explain. Plus, casino stocks hitting fresh 52-week highs today. These have been some of the hottest trades over the last year. We'll tell you if the traders are buying this move. Much more fast money right after this.
More than 24,000 companies run their business in the Oracle Cloud.
At Sur La Table, we provide tools, knowledge, and experience to inspire our customers in their culinary journey. We partnered with Oracle Commerce Cloud to streamline our business and drive the best customer experience in our stores, kitchens, and online.
Oracle, more enterprise cloud applications than anyone else.
I'm Chuck Hughes.